Let's talk about tariffs. Imagine you're buying a delicious burrito from your favorite food truck. Suddenly, the government swoops in and slaps an extra fee on top of the price just because the burrito ingredients came from another country. That, my friends, is a tariff in a nutshell. Governments use tariffs for different reasons, often claiming it's to protect domestic industries. The idea is that by making foreign goods more expensive, people will be more likely to buy local. Former President Trump, for example, imposed tariffs on goods from countries like Mexico, Canada, and China, arguing it was a way to boost American businesses. Now, you might be thinking, hey, if it helps American businesses, isn't that a good thing? Well, hold your horses, because it's not always that simple. These tariffs, like unexpected jalapenos in your burrito, can leave a bad taste in your mouth. They often lead to higher prices for consumers, which, let's face it, nobody enjoys. And while they're intended to help domestic industries, they can sometimes backfire, but we'll get to that later. Remember that delicious $1,000 product you were eyeing from Mexico? Well, thanks to tariffs, it now costs you a whopping $1,250. That's right, 25% extra just because it dared to cross a border. Suddenly, that online shopping spree doesn't seem so appealing, does it? The idea behind tariffs is that by increasing the price of foreign goods, people will opt for cheaper, locally produced alternatives. This, in theory, should boost domestic industries. However, it's not always smooth sailing. Sometimes, tariffs can actually harm the very industries they're supposed to protect. Imagine a domestic company that relies on imported parts to make its products. With tariffs driving up the cost of those parts, the company is forced to increase its prices, making it less competitive. It's like trying to win a race with your shoelaces tied together. Moreover, reduced competition from foreign companies can lead to complacency and stagnation within domestic industries. Without the pressure to innovate and improve, they might end up offering overpriced and outdated products. So while the intention might be good, the reality can be a bit more complicated. Remember Bitcoin, that digital currency everyone was talking about? Well, around the same time tariffs were making headlines, Bitcoin prices took a nosedive. Coincidence? Maybe. But it does highlight how interconnected our global economy is. When governments start messing with trade, it creates uncertainty in the markets. Investors get nervous, and this can trigger volatility in everything from stocks to cryptocurrencies. Remember Nvidia, that tech company? Their stock prices went on a roller coaster ride following tariff announcements. It's enough to make even the most seasoned investor reach for the antacids. The takeaway here is that tariffs don't exist in a vacuum. They have a ripple effect, impacting various markets in often unpredictable ways. It's like a game of economic Jenga, and nobody wants to be around when the tower collapses. So, what's the solution? Well, if you've got a magic wand, please let us know. The reality is that global trade is complex and there are no easy answers. Tariffs, like most economic policies, have their pros and cons. The key is to stay informed, to understand the potential consequences of these policies, and to hold our leaders accountable. We need to demand transparency and thoughtful decision-making that considers the long-term implications for consumers, businesses, and the global economy as a whole. In the meantime, keep an eye on the news, because in this interconnected world, what happens in one corner of the globe can quickly impact us all. And maybe stock up on your favorite imported goods, just in case, for research.